The housing market collapse must be imminent, with prices through the roof, interest rates through the roof, lack of demand, and everything that's going on. How long do you think it's going to be until we see the collapse finally happen? All the Airbnb laws changing and everything else. Stick around, watch through this video, and I'll get into all of that and explain it as we move. Good morning. My name is Adam Kahn, and I'm the Rational Investor. Today is Saturday, October 7th. I hope you're all enjoying your weekend. Beautiful day here in Las Vegas. Couldn't be nicer. Before I forget, do me a favor, hit that subscribe button, smash that like button, do what you can, chime in, tell me what I'm right about, what I'm wrong about, what you think about the markets. I love to argue and converse about these things. Um, the other thing is, I'm going to put a link in the description about opening an account at SoFi. It'll get you an extra $25 if you fund the account with $10 or more. SoFi is a really good trading platform, and the nice thing is it gets my son, who's 12-year-old, a little bit of a gift, and he gets super excited when that happens, so I appreciate that as well. But to be fair, they have a good system in place. They're a good company. So if you want to open an account and trade stocks or things like that, I'll put the link in the description. So when's the housing crash going to come? I don't know, maybe 5 years out, maybe longer, maybe shorter. But I don't see it any time in the short future, even as slow as we've gotten. Demand has really fallen off a good bit, and it's slowed the amount of contracts and purchasing that's been going on. But I don't really see a huge influx of inventory despite what the intro said. And I don't really see a collapse coming anytime soon. So why not? I mean, I get all the data points and I see all the things out there that make it fearful. But here's the problem, because when I listen to the things going on and what I read about is it's going to happen because prices have gone through the roof. The dollar is going to become worthless because we owe too much money. But I want you to think about that, because that's the part that I really want to hone in on. If we've spent too much money and the dollar is going to get weaker and inflate, as your dollar gets weaker and you have less purchasing power, why would you expect to see home prices become less expensive? Just think about that for a minute. If your dollar can buy less and you need more of them to go buy eggs and groceries and shoes and clothes and cars and everything else, but not houses, houses are just going to get cheaper. I think that's more of a hope than a reality. And I understand the hope because it's gotten really expensive. And for those on the sidelines who want to buy a house, it's gotten much more unaffordable than it was 2, 3, 4 years ago. But where I think we can agree, even if you disagree with my viewpoint on the housing market, is I don't see it going back to the way things were pre-pandemic. I don't see eggs coming back to 99 cents a dozen. I don't see other things like that going back. I don't picture being able to buy a Honda Accord for $18,000 or $20,000. I just think the inflation is real, and that's not going to change. And I don't see that as being any different for housing. There seems to be some misunderstanding, because a house is an expensive product, that it's different than everything else that you look at. For me, I'm a little bit old. I was born in 1972. Maybe I'm not that old, but I feel like I am. I grew up in New York. I remember on one of the buildings, they used to have these numbers that would go around and around and around, and you could see the numbers constantly going up, and they were going up super fast. And it was how much money we owed. It was our deficit. And I remember my parents talking about it, about how much the US owes and how unaffordable it is and how it's going to impact the economy and everything else. And that seems like the same rhetoric I'm hearing today, 40 years later. You know, I know the US owes a lot of money. I know that we are in too much debt. But if you're another country, where would you rather invest? And we're still able to sell our bonds, which is where the debt comes from. When there's a bond auction, that's how we lend. it seems like there's still demand to buy that product. Now the price is going lower, which is why the rates are going higher. People see the inflation, but they also see the risk too, which I don't know if you watched my other video. It's where I kind of agree with Bill Ackman that it's hard not to imagine the long end of the yield starting to get higher return and go lower in price. Meaning, I, I'm not surprised that the 30-year finally breached 5% on Friday. I wouldn't be surprised to see it actually get through it and sustain it and start getting into the sixes and sevens. And if that happens, I think everyone might be surprised that we don't have the huge recession from the inverted yield curve that people talk about, which is also why I don't see housing collapsing. So typically, the yield uninverts because the Fed sees a recession already happening. They start to cut short term rates. An inverted yield curve starts to uninvert because they're cutting the short term end of the curve to get ahead of the recession or stop some impending terrible collapse from happening. If that doesn't happen this time, and we see the 10-year and the 30-year start to give higher yields and lower prices in the bond price, well, I think that's natural. It'll uninvert the curve. All the economists will expect some doomsday bad economy and big recession to come because we've had a really deep inversion for an extended period of time. And 100% of the time when it uninverts, that's predicted a recession and a bad economy to follow. But it's happened for different reasons than we see it happening now. I think the markets are finally believing Powell with this higher for longer rhetoric. And if the economy continues to move along the way it has been, and we don't have tons of unemployment, and we don't have things crack the way they're expecting them to crack, well, eventually the markets may believe the rhetoric and start normalizing the yield curve without having this big event that everybody's expecting to happen. My one concern is there can always be a Black Swan event that can change these things. Today Israel just ended up going to war. Those are not good things, and those are things that can impact or change the economy. Now, this is my prediction. You guys need to do your own research, come up with your own ideas. Don't listen to me. Like, really, I'm just some idiot talking on YouTube. I hope you enjoy the content, or I hope you hate it and think I'm a moron, but you still watch it anyway because you hate me. Like, that's cool too. But either way, the wars, the things that can change it can really change it. But if war happens, unless it's in our backyard and bombs are going off, similarly, prices of properties could sustain and they could even go higher. I actually think if we don't get more inventory, what you're going to see is the normal ebb and flow of monthly cycles. Typically after the summertime, people get focused on the holidays and they don't focus on purchasing homes. So the people who are still on the market that didn't sell start to get nervous. You see prices drop a little bit. And then after the new year, when the holidays are over and people start getting back to normal life, maybe by the end of January, beginning February, March, April, and they start looking for homes again, well, the prices start going back up. If we don't have more inventory come to the market during this time frame where the house prices tend to drop, boy, by February, March, or April, even if rates are still here or even a little bit higher, if there's no more inventory, could see the prices go up again next year, next summer when the demand starts coming along. Especially what happens is by the summer, the people who are moving to new areas and want to get into a specific location because they want to get their kids registered for school, they really have a short time that they need to make a decision and find the houses that they want, which is part of why the cycle is the way it is. They start rushing in, it pushes the prices back up, and that's just the general ebb and flow of the monthly cycles of real estate. So kind of a weird situation that we're in where I can see rates going higher and the prices of homes going higher too. I think the affordability is going to get more and more difficult for people. Just look at your own lives and what's going on. And Ask yourself where you've really cut back, or where you go that you look now and you see, boy, they're really slow and they're really struggling. I don't see a whole lot of places in that position. I do see some, but I think that's typical economy, which is why I say I don't think it's as bad as people think, and I don't really see this big gloom and doom collapse coming. People point to the foreclosure rate going up significantly. Well, that's compared to last year. If you look back over the history of the foreclosure rates, we're still super low. I mean, Nevada is topping the chart, and we're at 1 in 2,227 homes or something, or 2,224 homes. That's a really low foreclosure rate. So to think that the foreclosures are all coming and we're going to have a big collapse because of that, it doesn't make sense to me. Even the Airbnb laws, when I look at, there's 40,000 homes in New York that are short-term rentals. Well, some of those qualify to be short-term rentals. I don't have the exact percentage, and I get that that's a decent sized number. But I would bet that we're not going to see all 4,000 of them come to the market in some huge panic if I need to sell today because I can't do short-term rentals anymore. Whatever percentage comes, there's a lack of inventory there too. I think the demand is there to support the markets. There is demand to buy. In fact, most of the people that are gloom and doom and all the people in the comments who are talking about, oh, a collapse is coming, a collapse is coming, most of them are saying that because they want the collapse, because they want to be able to buy at a cheaper price. That's called demand, right? That's a base of where there is support for a market. Markets don't usually go through that support unless that demand fades or it's met by so much supply that it blows through it. Well, as long as we continue to have demand below the market will push higher. You know, general economics, supply and demand outweighs every other data point you can point to. And if there's a lack of supply and there is still demand, the trajectory, forgive me, is upwards. It's not downwards. Like the demand is going to continue to push it up, despite even me scratching my head going, it doesn't make sense. I feel the same way about the stock market. I don't know what's going to stop Nvidia's earnings next quarter or the one after. They make a chip that has a ton of demand by a lot of companies that have a lot of money to buy those chips, or Facebook, or Google, or what do we think the Christmas holiday is going to look like? Are you guys not buying gifts for your kids? Are you cutting back? Are you going to do it smaller? Like, what is your plan for the holidays that's going to make the sales be really bad for the retailers like Target or Walmart or Best Buy or whomever, where you get your gifts for your family and friends? To be perfectly honest, full disclosure, I've been buying some Target stock because as they've been falling because of the news of the store closures and everything else. I mean, think about it for a minute. They're closing stores that aren't profitable, and that's hurting the stock price. So I have a profitable company, and I'm closing up divisions that are losing money to make me more profitable. And because that's shown in the news that they have to close stores, the stock is falling further. I, I don't know. I would think that would make them more profitable and be better for the company, not worse. I mean, if I'm Target, I'm thrilled to close up these stores that aren't making money. Yeah, the spin is that there's too much theft or whatever's going on, but really, what's the difference? We make a good amount of money. I'm able to cut these costs of these places that aren't profitable, and my stock price is going lower. Now, I'm going to repeat something I say all the time. I am not a financial advisor. You guys need to do your own research. I haven't even dug into it, so I don't want to overstate it as if I'm correct. Like, don't follow me. But it doesn't make sense to me. I remember being really little, and I don't even remember what company it was, but on the news, there was a company that was letting go a lot of employees, and on the news channel, they were showing how the stock was falling further. And I looked at my parents and I said, I don't understand. If they're getting rid of employees and cutting their costs, why would the stock keep falling further? Keep it simple, stupid. Sometimes when I overanalyze things, or anybody, sometimes we tend to overthink it. I can't explain why the housing market's going to go higher other than the supply and demand. And yes, the demand has waned, but there's a lot less supply than there is demand. Anyway, do me a favor, hit the subscribe button, hit the like button, share my information with your friends or whoever else likes economics and talking markets. Um, Really helps the channel, and I appreciate all the help. Have a great day.